The markets right now, are as expected. I'm actually pleasantly surprised at the resiliency. And I think what we're seeing right now are some glimmers of hope. Right? I think we've all talked about how dire this is, and it is still dire in the United States. But fortunately, we're getting some positive news as to how China is coming back. We're getting some positive news as the potential for this to begin to tail off as we move into the latter part of the year, which I think all of us have thought through and thought about happening. And assuming people continue to do as they're told and staying quarantined and staying 6 to 10 feet apart even, I think we will start to see things change. The Fed has been incredibly responsive, and hats off to what's going on as it relates to the Fed and their responsiveness in the markets. No one wants to see this turn into a meltdown that lasts any longer than it should or has to.
Yeah. Joe Chernova, I come to you. It was a historic week last week. We had those huge moves leading into the Friday give back. And I'm just wondering if that gave us false hope into thinking that the market was in a better place than the reality would suggest. And I ask you that question in the context of a Brian Belsky note today, who says he continues to believe we're in the midst of a secular bull market. There is no reason to believe that U.S. stocks will not see upside moves akin to the exacerbating weakness suffered over the past few weeks. Is that a reasonable thought to discuss?
Listen, it's a reasonable thought, but I also think, Scott, we have to shorten the thought process just a little bit. The markets cannot mitigate the healthcare risk. That, by far, is unquestionable. I find myself every evening after a strong day in the capital markets going home and listening to Dr. Fauci and Dr. Birx at 5 o'clock to get some confirmation on what I'm seeing on my screen. I would say the comfort I could take from the capital markets is a lot of what Courtney addressed from the Federal Reserve. The Federal Reserve has stepped in. They've provided tremendous liquidity. They have suppressed the elevated volatility in the Treasury market, and they've allowed in the credit markets the unlocking, finally, of some flows. Yesterday, we had the first high-yield offering since March 4th with Yum Brands. Tomorrow, Scott, Carnival Cruise Lines is going to try and offer $3 to $6 billion worth of debt. That's going to be very critical to see if investors are going to support that type of offering. So there are things that you could gain comfort in the market, certainly over the last week. But listen, the resolution to all this is going to come on the healthcare side.
Well, that's why I say, Joe, you know what? I mean, the Fed has done a lot, and the Fed can do more. And the Fed has given a lot of investors comfort that it's put somewhat of a floor underneath things. But, Steph, the Fed can't flatten the curve. It can't do that in any way, shape, or form. And I know Joe suggests that in the bigger picture, this is all a healthcare issue. And until you have some improvements on the healthcare side, it's hard to make a compelling, even medium-term case, I think, unless you think otherwise. I mean, we've just put in 3 negative months back to back to back, right? You haven't done that since 08. And it leaves us entering April wondering where we're going on the virus. Governor Cuomo is out as we speak right now with some just horrifying numbers about what's taking place across the river from where I'm sitting right now. And that still dominates the conversation. And I don't know how the market is going to be able to deal with that. And maybe it can, but it's going to have to deal with it over the next few weeks minimum.
Well, for sure. I think last week was really critical because the Fed did put the backstop in with unlimited QE. We talked about that last week. That stabilized the bond market. Then you had the fiscal package get passed. That stabilized, hopefully, small businesses and gain a little bit of confidence in the consumer. I think more on the fiscal side needs to be done, and that's the scuttlebutt going on the last couple of days. But what is the next stimulus package going to be? Because that, in fact, will be stimulus versus just stabilization. But I think that, it's equally important this week that we're hearing more about the tests and the vaccines and the healthcare side, as Joe mentioned, because it feels to me like we're going more on the offensive on the virus this week, that we're taking social distancing much more seriously. And that is going to lead to better results down the road. Volatility is here. The VIX at 51 is telling you that. It's not going to go away anytime soon. for the markets really to stabilize and to see an upward trajectory, much more than what we've seen, you do need a peak in the virus. I do think in April we're going to get it. I don't know if we're going to see another bottom, another leg down. That's why I've been nibbling, because I do believe that we're going to get through this. And in 6, 8, 10 months from now, I'll be happy that I actually bought. So adding to Microsoft and to Google and Union Pacific and Chevron and Wynn Resorts. So a barbell approach of some defensive, some cyclicals, high quality, good balance sheets.
Yeah.